You know, there's a lot of drama with the Fed. Usually it's just, will they raise interest rates? Will they cut interest rates? Will they hold interest rates? But now it's like we don't even know what the makeup of the committee or who the chair is going to be. What do you think is the biggest wild card at this point into 2026 on the Fed?
I think there are two or three wild cards. One is just the state of the economy. The data coming in has been mixed, shall we say. We've seen unemployment, ticking up somewhat to 4.6%, job creation slowing, wages slowing, wage growth slowing as well. And at the same time, we've had a GDP reading that, even if you take out the noise, suggests a pretty strong economy with consumers leading the way. So that's uncertainty one. Uncertainty two, as you point out, is who is the next chair going to be? And uncertainty three, I think, is the process of bringing that chair in. Does it reinforce the notion of Fed independence, or does it undercut the notion of Fed independence? So those are three things I'd be looking out for.
What's the story with Fed independence? Is there really cause for concern?
That's an awfully good question, Sarah. First thing people understand is Fed independence is not a given. There was a big debate back and forth, ultimately settled in President Truman's office with the Fed Accord, Fed Treasury Accord, creating the independent Fed in 1951. Second point is there's always a lot of tension between the White House and the chairman of the Fed or the Fed. Point three, though, this is really unusual. The degree to which that tension is spilled over into the public, the degree to which the president has directly attacked the intelligence of the chairman, and frankly, then, the legal attack on Fed independence. So I think it is not a given. I think it's likely to be handled well by the Supreme Court. But then there's still the whole question of whether or not the new chair of the Fed will be able to demonstrate to the markets satisfaction, credibility around being independent of a president who says, you can only be appointed chair if you agree with me.
So you sort of alluded to the Supreme Court. January 21st, the Supreme Court hears oral arguments on the Lisa Cook case. This is the Fed governor that the president is trying to fire, and there are questions about whether he can do that with cause. What do you think is at stake on that decision?
Everything. So if the unlikely event that the Supreme Court decides that a governor of the Fed can be removed under these circumstances, the entire question of Fed independence, I think, is open and up in the air. The Supreme Court has hinted that the Fed is different from other agencies where they've given the president the authority to fire people based on policy disagreements, which had been removed in the 1930s. So I think the odds are, and the market is acting as though the Supreme Court will recognize the Fed is somewhat different here and work hard to create a really high standard before a president can remove a sitting governor.
Yeah, I mean, there's that case. And then you said the other question on independence relates to the chair and whether they can demonstrate, I guess he in this case, because now that we know the four remaining are he's, independence. I mean, I feel like this is a little bit overblown because all four people that are in contention here are people who understand the Fed, understand the economy, and more importantly, understand the markets. And the bond market really will tell the Fed if there's a risk that they're making a policy mistake. Don't you think?
No, to be fair, I agree with you. Right? I think any one of these four people get in, and I know three of them very well, they will recognize that, in the long run, history will judge them by how well they protect the Fed's independence and how well they make decisions based on the incoming data. Point two, it's not just the long run, but as you say, the market will be looking. And if they make decisions that are not credible in terms of maintaining inflation at a very low level and maximum sustainable growth, I think you'll see, the market punish them. But we should also be aware that, not everyone will necessarily recognize that risk right away. And so I agree with you over the long run. The question is what happens in the first few meetings.
Okay, so bigger risk next year. Is it going to be upside on inflation or on unemployment rate?
I think unemployment's likely to continue to creep up a little bit. But I have to say, inflation has been running above the Fed's target for 5 years. The forecast from some Fed officials is inflation getting back to 2% 3 years from now. That doesn't strike me as increasing Fed credibility. We had a policymaker, president of one of the reserve banks, openly musing about the Fed gradually losing credibility. So, I'm not one to say inflation is behind us, and I think they really need to be on their toes for that.
No, it's just the jobs picture maybe looks a little bit more dicey at this point.
It looks a little bit more dicey for sure, but part of the problem is we don't know what's driving that. So there's this tension between an economy that's continuing to grow, consumers that are continuing to lead the way, and unemployment that's sort of gradually ratcheting up. And so that throws into question, is the labor market still imbalanced but somewhat softer? Is it a precursor to a rapid fall off? Or frankly, is a reflection of an economy that's becoming more capital intensive and maybe even becoming more productive? And so I think there's a tension there around what is a, quote, soft labor market really telling us about the underlying of the economy.